Chapter 5 Property Insurance Policies. Major source of premium is for the personal property. Personal property insurance policies, Chapter 6, Homeowners Basics 1151, brought from 1153, and comprehensive is 1155. Condominium is 1165. Commercial property insurance policies, Chapter 7, which will learn more about businesses and policies. We'll discuss about this in this chapter. What does policy mean? It means insurance contract. An insurance contract binds in a binder by the insured and the insurer. The developer of the insurance policy. Insurance Bureau of Canada, IBC, contributes up to 125 insurance companies. It is sold by the insurer, such as RBC, Desjardins, has the authority to make the changes or modify the insurance form, and not the agent or the brokerage, which you have learned in previous chapters. Named perils are insurance policies that name the peril means fire peril, cause of risk. Loss is caused by the peril and not named in the policy, then is not covered. Broadest coverage means comprehensive, such as ICBC provides that. Extensive coverage on all names policies of direct physical loss or damage which is subject to conditions and exclusions with additional cost. Identification of the insurance policy will be shown on the declaration page, as you have learned in Chapter 3, Contents of Insurance Policies Legislated. The property insurance policy contains the time, date, location, address, and the name of the insured. The cost of the insurance. The insurance policy is restricted to the location of the insured, which is very important. What is a direct damage? It's a water damage caused by firefighters hosing water, physical damage to the roof, access by the firefighter, smoke and heat damage to adjacent walls, lightning strike to fireplace, also damaging the electronics, which you'll learn in later chapters, and also you have learned in previous chapters. What are indirect damages? These are cost for a separate policy with its extra expense forms. Lightning strike cost, loss of food in freezer, not due to damage itself. Loss of rental income from apartment endorsed on insurance policy and not covered for tenants at personal property. Caused by tornado, which is not in BC, but the loss of profit to businesses if it is tornado. Conditions is to do or not to do something. Condition applies to all policies, including specific coverage areas. Two types of conditions. One is statutory, which you have learned the 15 conditions, and then one is policy condition, which we're going to learn later. Right now, we'll start with two types of condition. One is statutory condition, just 15 of them, on all property policy, peril of fire, accidental, and automobile, which is ICBC Insurance Corporation of BC. Policy condition is specifically developed to deal with important coverage, equipped by a safety device such as sprinkler system and burglar alarms. Should immediately inform the insurer as soon as possible if fire or burglary happened. What is burglary? A forceful entry or unlawfully entering or leaving the premises as evidence. So make sure that if there is a condition in the policy, the insurer will ask you to do certain things in order to be covered. So that's condition. It's something to do or not to do. So that's that. Warranties. Warranties are equivalent same as to guarantees. A promise by insured that certain facts are truly as they are represented and the duration of the policy. Example, if you have to return an item, you have to be honest about the product. If you have directly damaged the product in returning, the insurer will not cover the warranty. So now you know the difference between conditions, Warranties. Warranties are same as guarantees. So warranty is to do or not to do something? No. Conditions is to do or not to do something. Warranties are a promise made by the insured. Exclusions, which means not covered and will have separate policy. Two types of exclusions, property and peril. Property excluded means the death owed, security in money, automobiles or any other vehicles, watercrafts, aircrafts, books and accounts, vacant property over 30 days. 15 days is okay, but not 30 days. Peril is excluded in case of earthquake and flood, smoke damage due to agriculture or industry, wear and tear, rust and corrosion, wear, war, nuclear, increased cost of construction or enforced by law, sewer backup. These are natural things that will not be covered unless you have a separate policy. Remember, broadest form contains exclusions also. What is deductible? It's a partial retention of loss amount. In other words, to say the higher the deductible, the lower the premium amount. Rationale for deductions is to help keep the insurance affordable. Personal property applies to all property coverage. Commercial properties, it is divided into groups such as stocks, equipment, and building. So everything will be separate. Automobile is separate. There's a deductible for that too. Remember, minimum deductible is $500 or no more. How does the actual cash payment or claim payments are made? Well, we'll take the pair of earrings. It's material things. For actual cash value, everything is material. If you have purchased earrings for anything, it will be valued at that. Then the purchase price will be ownership 100%. It belongs to a person. A replacement cost value will be replaced only if certain amount of things are missing, such as if you have two pairs of earrings, one is missing, one will be lost. So $500 for that, half the price, and then deductible. Let's say it took $200. So actual cash value of your earrings were $1,000. Replacement value for one earring is $500 minus the $200, so the insurer will pay you $300. $200 you have to pay. So that's your deductible. What is a replacement cost? Actual cost, no deductions. This applies to personal property, commercial property. Not include actual cash value will have deductions. Like ICBC has deductibles. And that's your motor vehicle. So the replacement value has no deductibles. For all repair replacement regarding construction or due to fire damage. How to settle is a claim with repair or replacement. The replacement cost with no deductibles equals to what the insurer will pay, the actual amount of the replacement value. Things you need to remember for Chapter 5. Its conditions. Has been breached by insured, denial by insurer. Other options. Breach of conditions will not be denied so long as the loss was not caused by such a breach. Breach of warranty has an effect result from the insured. Then the insurer will not pay for the claim because of the direct cause of damage. Excuse me. Difference between mortgagor and mortgagee. Mortgagor is the owner or occupant who has the insured to cover the mortgage in case of peril. Mortgagee is the lender, subject to the terms of the mortgage clause, and the interest of the policy will be going to the mortgagee. So you know the difference between mortgagor and mortgagee. Replacement is a repair, replacement, construction, or reconstruction of a new property or alike. Replacement cost is without deductions for depreciation for repair, replacement, or construction. Actual cost. No more, no less. ACV is value policy. Insurers pay for jewelry, furs, antiques, and any other materials. This is replacement cost, less depreciation. A replacement cost endorsement is for commercial property part form, commercial property named payroll forms. The endorsement applies separately to each item for which replacement cost is specifically on the declaration page. Excluded from the commercial property part form named payroll forms. The endorsement does not apply to, but applies to actual cash value, stock, equipment, antiques, jewelries, increased cost caused by law. That is nothing to do with the commercial broad form or named payroll form. Standard mortgage clause. Warranties, guarantees. Indemnity agreement. That is very valuable to understand. Mortgage's interest is to protect in case of insured breaches, conditions, or warranties, as long as the insurance has the coverage. End of chapter 5.